Good morning, everyone. This is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, May 12th, 2025. Now, our normal setup is we go through the economic activity from the prior week, the results from the prior week, and then take a preview of the economic data coming out this week. However, we'll just take a moment here to just announce or to inform that we had a major economic development over the weekend, and that was U.S.-China trade talks. So this has been the biggest overhang of the market by far, the tariff situation. We're still not out of the woods. There will still be some pain from it. Still a lot of stuff to sort through. However, this is a major breakthrough, no doubt about it. So U.S.-China over the weekend, I believe on Sunday, they announced a sort of a temporary agreement. Now they're going to continue talking. This is only in place for the next 90 days, but here are the bullet point takeaways from it. One is that President Trump's reciprocal tariff against China had been 125%, drops to 10%. There is a separate 20% tariff that is imposed over what President Trump described as China's role in fentanyl trade. That'll remain. But for their part then, China said they'll cut their retaliatory tariffs on the U.S. goods from 125% down to 10%. So the markets love this. This morning, S&P 500 up roughly 3%. We'll see where it ends the day. But this is wonderful news, just no doubt about it. But also at the same time, there is a lot of work that has to be done, a lot of things that have to be agreed to, so much negotiating before this expires in 90 days. So to get this one moving in the right direction is just I can't understate what a positive it is for U.S. markets. So now let's go back and take a look at the economic activity from last week, which is very little. We'll just go through it real quick. So ISM services. ISM indicator, both services, manufacturing, 50, again, is a demarcation line. Below 50 means contraction, above expansion. So the expectation was for the April number that it was going to come in at 50.6, very close to that contraction area. Actually came in a point better, which is very positive, 51.6. The only other economic activity data point last week was the Federal Reserve rate decision, which came out on Wednesday. No change in interest rates and really no change in policy or stance. So that's neutral. I would say it's kind of positive, but a neutral event from last week. And the only other data point was the initial jobless claims, which we're pretty focused on, expecting that to move up at some point. But boy, it has been impressive on the low side. So expectation was it would come in at 230,000 new claims, came in at 228. So as a result of all this, again, we look at the Atlanta Federal Reserve, the Fed now, to see what their expectation is for second quarter GDP. Now, first quarter, we mentioned 2 weeks ago that it was negative, but it was negative really because of net imports, whether it was front-running tariffs, gold, silver purchases by the U.S. government. Nonetheless, if you took out the net export-import imbalance, it was actually a very strong GDP number for the first quarter. But for the second quarter, Atlanta Federal Reserve took their estimate up last week to 2.3%. That was up from 2.2% the week before. I will mention that the consensus, the blue chip economist forecast is for a little bit less than 1% for second quarter. We'll go through a number of slides here real quick. Inflation expectations, 10-year break even. This has been pretty solid, has not moved around a great deal this year. It moved up just a little bit, 2 basis points last year, but is at a very manageable, very good 2.29% expectation for average inflation over the next 10 years. Here's a big move from last week, Fed funds. So we said the Fed did not change, did not move interest rates last week. But now the expectation is they are going to push off further cuts. And given what the Atlanta Fed thinks is going on, plus this U.S.-China deal, This is going to get pushed off even further, very likely. So the June meeting, there's an expectation, 11% expectation of one cut. Again, after today, this is probably much closer to zero. This was as of the end of the day Friday. And then also as of the end of the day Friday, the odds of at least 2 cuts by the end of the year, 50 basis points, had been at 70% the week before. That dropped to 40. And now there's only a 10% probability of 3 rate cuts by the end of the year. That was closer to 50% just a week ago. So expectations for Fed cuts being pushed out simply because of really stronger economic growth than expected. Returns last week. S&P 500, a little negative last week, down 0.5%. Really not much to talk about in terms of the week. Growth versus value, not any big deal. So we'll just recap on a year-to-date basis. And for most investors, many of our clients, year-to-date has felt a lot worse than this. But the reality is S&P 500, as of the end of the day Friday, down 3.34%. So not great, obviously, but not really a disaster. And we'll see how today, Monday, finishes. But we're on track to finish pretty close to flat for the year on a year-to-date basis. In terms of international markets, much like the U.S., slight decrease in developed markets, down 25 basis points last week. Emerging markets up slightly, up 45 basis points. So kind of meandering, no real direction strongly either way for U.S. developed, ex-U.S. or emerging markets. Fixed income last week down. 2-year and the 10-year both up 8 basis points. So the Bloomberg U.S. Aggregate Bond Index was down 17 basis points, and now on a year-to-date basis, it's up a very strong 2.2%. Well, let's take a look at the economic activity that will be released this week. And this is a much more impactful, chock-full schedule this week versus last week. A lot of inflation news. So on tomorrow, Tuesday the 13th, we'll get core inflation, CPI, both core and headline number. I'll just give you the month over month for each. The expectation for the headline number is expected to be plus 0.3% in April. Month over month, as is the core, plus 0.3. Now, for the headline number in the month of March, that was actually down, negative 0.1, and the core was up 0.1. So the expectation is an increase in inflation on a month over month basis as measured by the CPI. On Thursday, we'll get producer price index, both the core and the headline number. The producer price index month over month is expected to be up 0.2%, modest, but the month of March was actually down 0.4%. I would say the biggest metric coming out of this week's data, again, these inflation numbers, large, they're big, they're impactful, but retail sales. So retail sales comes out on Thursday, retail sales and retail sales ex-auto. So for the month of March, retail sales were up a very strong month over month, positive 1.5%. The expectation is that it was flat in the month of April. Again, there'll be a lot of focus on this metric, obviously, because it looked like we had a very good March in terms of consumer sales, which followed a flat January and slightly up February. So Thursday will be very important. Lastly, on Friday, we will have the Michigan Consumer Sentiment. Again, this is big. This chart looks ugly. It has been down. We're down near the worst levels of COVID. Last month, for the month of April, it came in at 52.2. The expectation is for May that will come in at 53.1 positive. So that is it for our economic recap. We thank you very much for your attendance, and we'll look forward to seeing you next week. Thank you.